Get ready for a potentially volatile start, as Gift Nifty signals a 168-point gap down today. Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 14th, Tuesday, promises another vibrant, positive trading day. It's Nifty expiry day. Let us deep dive into the detailed reports. Chinese Premier Li Qiang has underscored the need for stronger counter-cyclical adjustment amidst signs of slowing economic momentum, urging a comprehensive and objective view of the current situation. This signals Beijing's readiness for further policy intervention, potentially lending support to global commodity demand and broader market sentiment, although a pronounced slowdown in China could weigh on Indian manufacturing exports and industrial metal prices. India has rejected a swift trade agreement with the US in recent talks, opting to hold out for better terms, bolstered by new trading partners and eased economic risks. This development, alongside potential US tariffs over alleged forced labor practices, could put the spotlight on trade-sensitive Indian sectors and may prompt a reassessment of export growth prospects for specific companies. The Bank of Japan and the Takaichi government are sending conflicting messages on monetary policy and fiscal financing, creating market uncertainty regarding future rate hikes and the yen's trajectory. This policy divergence may fuel yen volatility, potentially influencing carry trade dynamics and global capital flows, leaving room for cautious investor sentiment towards Asian markets, including India. Major Indian IT and financial services companies have delivered better than expected first quarter earnings. HCL Technologies reported a 20% year-on-year profit rise, while L&T Finance surpassed forecasts with robust growth in its retail book and net profit. This strong showing from key sectors could lend support to the broader Indian market today, especially lifting sentiment for bellwether IT names and financial stocks, with an eye on sustained demand. SpaceX shares have continued their decline for a second consecutive day, now approaching their initial public offering price of $135 per share. This notable dip in one of the world's highest-profile recent IPOs could weigh on global technology sector sentiment, potentially creating headwinds for Indian tech stocks that have seen strong runs, as investors reassess valuations in the high-growth segment. Ferguson Enterprises has announced a definitive agreement to acquire Flowworks, a leading industrial distributor, for approximately $1.6 billion. This significant M&A activity within the global industrial distribution sector underscores ongoing consolidation and could prompt a closer look at valuations and strategic moves within India's own industrial and infrastructure-related segments, leaving room for similar domestic deal-making.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign institutional investors were net sellers, pulling out over 3,062 crore rupees. Domestic institutional investors, however, bought more than 2,171 crore rupees. This suggests local buying cushioned the market impact from foreign outflows. If we look at yesterday's sectoral data, we see a clear rotation with Nifty IT showing robust gains of over 3.5% and Nifty Realty demonstrating strong weekly momentum. Conversely, Nifty FMCG and Nifty Infra are significantly weakening. This indicates money is actively flowing out of defensives and infrastructure, moving into technology and real estate, suggesting a shift for traders. Let us look at global events. India's Consumer Price Index for June 2026 came in at 4.38% year-on-year, beating expectations. This acceleration in inflation, driven by food and transport costs, could prompt the Reserve Bank of India to consider further rate hikes, negatively impacting Indian equities, especially banking and auto. The United States Consumer Price Index for June 2026 is due today, July 14th at 6 p.m. Indian Standard Time. This crucial data will shape Federal Reserve policy. A higher reading could lead to a stronger US dollar and foreign institutional investor outflows from India, impacting the broader. The Reserve Bank of India's Monetary Policy Committee will convene from August 3rd to August 5th, 2026. This upcoming meeting is crucial for India's interest rates and monetary policy, directly influencing corporate borrowing costs and foreign investment flows into the Indian stock market. The United States Producer Price Index for June 2026 is scheduled for release tomorrow, July 15th, at 6 p.m. Indian Standard Time. This key indicator of producer prices will influence the Federal Reserve's inflation outlook, potentially impacting global commodity prices and India's import costs. China's June 2026 Consumer Price Index rose 1.0%, missing expectations, while the Producer Price Index was in line at 4.1%. The weak consumer demand could lead to more Chinese stimulus, impacting Indian exports and commodity-linked sectors. Global markets showed caution overnight. Europe saw modest gains and some Asian indices rose. However, Shanghai dropped sharply and US futures are lower. Indian traders should anticipate a soft opening today, given the negative Nifty cues and broader tech weakness. Now let's move on to some Indian listed stocks highlighted in today's news updates for Tuesday, July 14th. State Bank of India is in focus as its asset management arm, SBI Funds Management, launches its initial public offering today, aiming to raise over 9,800 crore rupees. Grasim Industries is also watched after its group company Aditya Birla Renewables acquired Shell's India Green arm for 17,200 crore rupees. HCL Technologies, an IT heavyweight, reported a 20% year-on-year profit jump for its first quarter and declared an interim dividend. Millworks Technologies sees its initial public offering. Let's check what the RAS levels are saying about today's Nifty levels. The market sees a breakout level at 24137 and a breakdown level at 24118. Should Nifty turn bullish, we'll monitor resistances at R1 24202, R2 24268 and R3 243C3. Conversely, if the market falls, support levels to watch are S1 24053, S2 23988 and S3 23922. Today's central pivot range shows TC at 24184, the pivot at 24157 and BC at 24130. Analyzing the options matrix and derivative distribution, we observe a pronounced bullish shift, anchored by an escalating put-call ratio to 1.574 from 1.268, strongly indicating aggressive put writing and short covering ahead of the 2026 July 14 expiry. The 24,200 max pain point remains steadfast, suggesting institutional consensus for a spot close around this level, with significant supply walling at 24,500 and robust demand defending 24,000, outlining a critical range for immediate tactical positioning and potential long unwinding above 24,500. The India VIX closed at 13.28, marking an 8.41% rise from its previous close of 12.25. The 5-day trend is mixed. With Nifty at higher levels, this rise in VIX acts as a caution flag, suggesting increased volatility and a potential risk for a fall in Nifty. The CPR is positioned at TC 24,184, pivot 24,157, BC 24,130, expecting normal movements in the market today. Gift Nifty opened at 24,050, which is a significant gap down of 168 points compared to Nifty's previous close of 24,218. This suggests a likely bearish start for Nifty 50 today. The confirmation is key. The no-trade sideways zone for Nifty is set between 24,118 and 24,137, within which sideways movement is expected. A breakout above 24,137 could target an upside of 228 points, reaching 24,365. Conversely, a breakdown below 24,118 could target a downside of 61 points, reaching 24,057. Previous trading day, Nifty moved 172 points, indicating a bullish session. The weekly move was 172 points, and the monthly move was 313 points. The close did not sit tight against either extreme, so there is no strong directional carryover signal into today. And now the moment you've been waiting for. Today's final market verdict. Indian markets are showing a mixed to cautiously positive undertone for today's session. The Nifty closed at 24,211 with a small gain of 0.02%, and the Sensex also moved up 0.06%, both indicating a bullish bias above their breakout levels. Nifty futures are trading with a bullish premium of 38 points, supported by a long build-up signal. Options data also looks constructive, with a healthy put-call ratio of 1.57 and maximum pain at 24,200, suggesting strong support around 24,000 due to heavy put writing. Sectorally, information technology, media, and consumer durables led the gains. Foreign institutions were net sellers, but domestic institutions provided strong buying support. However, several critical red flags emerge. The custom RAS Exponential Moving Average trend is bearish across all major indices. The India VIX, our fear gauge, has risen by over 8%, signaling increased volatility. Global markets are largely negative, with our Gift Nifty indicating a significant gap down of 168 points at the open. Furthermore, Nifty's stock breadth is bearish, with more stocks declining than gaining. Weighing these signals together, while some internal market data looks constructive, the bearish technical signals, rising volatility, negative global cues, and weak market breadth suggest we anticipate a volatile day with an underlying cautious sentiment. Any upward movement could face resistance. And that wraps up today's Trade Vision pre-market report. If you found our insights helpful, please subscribe and ring that bell for daily updates. A quick like and share would mean the world to us, and we'd love to read your comments and advice below. Here's to a wonderfully profitable day for you.